Joining me today is Paul Fowler from Magna Mining, who have a very interesting near-term cash flow nickel project in the Sudbury region. Paul, thanks so much for joining us today.
You're welcome. Nice to meet you.
So I am relatively new to Magna Mining, as it's the first time we've chatted. So if you can introduce the company to our audience, maybe tell us a little bit about the projects you have and what they need to know to understand the company from a high level.
Yeah. So I'll try and do that in a couple of minutes, and then we can go into a few more details. So Magna Mining went public only in 2021, and the focus of the company really is on the Sudbury mining district. So we have two projects in Sudbury. Sudbury typically has been a nickel, copper, and PGM district, so all mines are polymetallic there. And we have two projects called Shakespeare and Crean Hill. A lot of our expertise at the management and board level are from individuals that have worked in Sudbury for their entire career. Most notably at a company called FNX in the early 2000s, which was really the only junior company to ever be successful in Sudbury because the doors are closed. Sudbury has been dominated by the majors for 100 years. It was originally dominated by Inco and Falconbridge. Inco and Falconbridge were two of Canada's biggest mining companies, and they were subsequently bought by Vale and Glencore. And Sudbury has been a big boys playground ever since, with the sole exception of FNX, and now hopefully followed by us.
So we often see companies that take over former closed mines, and it's not typically successful. What is it that you guys are going to be doing differently here?
Well, there are many reasons why you would want to operate in either an established mining district or a mine that's closed down. But it depends on the reason that the mine is closed down in the first place, of course, right? If it's through depletion and there's nothing left, then of course you wouldn't reopen it again. But in the case of Crean Hill, our flagship project at the moment, that was closed down in 2002, which at the time was a result of cyclically low nickel and copper prices. It was also closed down because the prior operators at the time, Inco, focused specifically on one type of mineralization at Crean Hill. I should say mainly on one type of mineralization at Crean Hill, which was something called the contact ore, which is very nickel and copper rich, which corresponded with what they were looking to fill their mills with in Sudbury. Now, we picked the mine up in basically just under 2 years ago, recognizing that we're in a paradigm shift for nickel and copper prices, and that we had a hunch that the mine itself would be incredibly profitable in the current paradigm of nickel and copper prices. And then, of course, layered on top of that, you have all the advantages with restarting a brownfield site, which are that the permitting process is either easier or it's already completed. All the infrastructure is either easier to set up or it's already in place. And all of these things were the case at Crean Hill. So we recognized the opportunity to start up a mine extremely quickly, extremely capital efficiently, and also with much less risk than you would find at a greenfield site, in a mine that we believed would be incredibly profitable at current nickel and copper prices, because it was shut down in the early part of the century when they were much lower.
So what needs to be done to get this asset back into production?
Well, that's a very good question. And to be slightly flippant about it, we need about 4 more days, because we're doing our first blast next week.
Okay.
Although having said that, I should add some context to that. What we're starting next week is something called test mining on a surface bulk sample. So earlier on this year, we got all the permits in place to restart production. We got our closure plan filed. We also completed 2 ore selling agreements with the 2 major mills in the Sudbury region, one with Vale and one with Glencore. So we have all the agreements in place such that when we start mining, we simply mine the ore, we send it to one of the local mills, and we start generating revenue. So that process will start from surface. The blasting will start from surface next week. We'll stockpile it for a short period of time, then we'll send it off, in this case, to Glencore's Strathcona mill, and shortly thereafter we'll start generating modest revenues. Following that, we'll then start developing a ramp underground and start mine infrastructure development, and then obviously start mining from underground and sending that ore to the Vale Clarabelle mill, probably starting early next year. So we're well underway, and yeah, hopefully over the next 2 years we should be able to ramp up to a commercial production rate.
How did you guys find a mill partner to work with? Is Vale invested in the company? What can you tell us there?
Yeah, no, Vale is not invested in the company. Vale, we have a very strong working relationship with Vale because Vale still own the closure plan on the property. It used to be their mine. So we work with them very regularly. We have a steering committee. We have a very good relationship with Vale. And as I alluded to earlier, our ore will be sent to the Clarabelle mill, Vale's Clarabelle mill. So the reason that we're able to do this, though, is because, as I think I said, there are 2 mills in Sudbury. One is owned by Glencore, one's owned by Vale, and they both have existing capacity. They're not operating at the same capacity as they used to many years ago. So both the mills are looking for ore, if it's the right sort of ore that they can process. And that's really something that's very unique for a base metals company and very unique specifically to us because we're in Sudbury. That really doesn't exist anywhere else in Canada that I'm aware of.
We hear that from mining promoters all the time when we get pitch deals that there's a mill nearby, we can just work with them, and I'm always skeptical of that, but that makes sense when you think about sort of Sudbury and all the production that has historically existed.
Yeah, that's right. You do hear that quite often, and I would say many people have aspirations to do that, but it's not quite that simple. You know, you don't know what terms you're going to get. You might know there's capacity, but until you actually start negotiations with the mill owner, you don't know what terms you're going to get, and those terms are going to be dependent on what it is you project to actually mine. And sometimes you don't know what it is you're going to mine, particularly if it's a deposit that hasn't been mined before. It might be the wrong metallurgy for the mill, for example. But in our case, we know the metallurgy works because our deposit was previously processed through the Clarabelle mill when Inco, now Vale, owned the mine. So we know it's compatible with the local mill. And yes, it's a function of the fact that Sudbury used to be producing more than it is today. So the 2 mills have capacity. And like I say, the key thing is that this is not just an aspiration. We actually now have the ore selling agreements in place with both Vale and Glencore. So as soon as we start digging and trucking the ore to the site, then we can process it there.
What does the ramp up look like in terms of production?
Well, what we have at the moment is a plan to mine for 2 years under something that's called advanced exploration. So although we're technically sending products to the mill and we'll be generating cash flow from it, it's still under something called an advanced exploration plan, because during this period of time, there is a ramp up. You know, you're developing an underground ramp through waste. Then you come across an area with ore and you send the ore to the mill, then you go back into the waste and keep developing the ramp down. And you have to ramp up to having a certain number of stopes in operation so that your product is consistent, and then you declare commercial production. And we anticipate that that period of time will take about 2 years. And we have a ore sending agreement to cover that 2-year period of time. So we know what we're going to be getting in terms of we know the terms under which we're sending our ore to the Clarabelle mill for that first 2 years. And the ramp up, as I say, it'll be quite volatile because there'll be periods when we're sending ore to the mill, there'll be periods when we're developing through waste. Roughly speaking, at the end of the 2 years, we aim to be somewhere around about, the current iteration of the plan is to be somewhere at about 700 tons per day, eventually ramping up to about 1,500 tons per day when we get to commercial production.
How challenging has the capital market environment been for you guys over the last couple of years?
Well, there's two questions embedded in that, if I may. The capital market conditions have been bad, as bad as you can, I'm sure you know and can expect. But we've navigated them relatively seamlessly on account of some very supportive shareholders that we have. So our largest shareholder is Jonathan Goodman, that a lot of mining investors would know, the Goodman family. He runs a company called Dundee Corporation, and Dundee Corporation now own 22%, just under 22% of our company. on account of putting in significant amounts of capital every time we've needed it, really, over the last 2 years. And we're also lucky that because of all the infrastructure that's already set up, and it's a brownfield site, our capital needs have, on a relative basis to many other junior development stories, have been really quite minor. So we've navigated the difficulties of the capital markets by virtue of having very small capital requirements and having very supportive big shareholders.
So if I'm an investor watching this or a potential investor and I want to evaluate management over, say, the next 12 months, what am I looking out for?
I would say, I mean, we're quite a simple story to evaluate, because I'd say it's all about execution, and that's how we portray ourselves and how we've been portraying ourselves for the last 12 months. Last year in 2023, we said, right, this is the plan. We're going to go and get all of our permits. We're going to get all selling agreements in place. We're going to start producing on a test mining basis in the middle of the year. And we've hit every single one of those milestones so far. So, we're going to say the same thing again. We're going to complete the surface bowl sample. We're going to start developing the ramp from underground. We'll go into underground development and test mining, hopefully in Q1, Q2, subject to financing. And then the other things we're trying to deliver will depend on, there'll be a bit of luck involved, because we've got a very active exploration strategy. One of our goals is to make a major exploration discovery. So you can look back and see if we were successful in that in 12 months' time. And then the other strand to our story that I would say we're going to aim to deliver over the next 12 months is to make further acquisitions in the Sudbury Basin. But similarly to exploration, it's difficult to project with any degree of certainty how successful we'll be doing that. But we're happy to say that that's an objective.
Well, Paul, thanks very much for joining us. I think you got a very interesting story, near-term cash flow, and I am going to be watching closely over the coming quarters to see how you guys perform, and hopefully you'll keep coming back on here and updating us as you guys roll out your ramp-up strategy.
Yeah, appreciate that. Yeah, thanks for having me. Thank you.